Hey guys, Chris Wootton here, Wootton Financial Group. Today we are talking about some pretty important tax management tools. So Roth IRAs, Roth conversions, some of the most powerful tools in retirement planning right now, but they also can be some of the most misunderstood. So we want to address that today. And the question isn't just, should I convert to a Roth? I mean, commonsensically, if you can make something tax-free rather than having tax ramifications to it, that makes sense. The question is, when should you do it? How much should you do? And does it really fit into the bigger picture of your financial life? And so today I want to walk you through some Roth conversion details, primarily taxes, timing, and risk management, and use some real life stories, although names have been changed to protect the innocent. But some real life stories of people I've worked with over the years. But the lessons that, we've learned through these are real. And we're going to keep it real simple. We're not going to go real deep in this particular video, but I think you'll get some good value out of it. So let's start with Susan. She was 62, about 3 years away from retirement. She had a pretty sizable IRA, traditional IRA, and she wanted the benefits of a Roth, right? Tax-free withdrawals, no required distributions, but she was still working at a very high income job. So if she had converted then while she was still working, the taxes on the conversions would have pushed her into the top tax bracket, right? And instead, we ran the numbers and we found that if she would just wait until retirement, her taxable income would be lower, and we could still do some pretty significant conversions. Basically, she could convert portions of her IRA in the future at lower tax rates. So what's the lesson here? Well, we mentioned timing in the opening. Timing of your conversions, laying out, in most cases, a multi-year strategy matters. So sometimes just waiting a few years can literally save you thousands of dollars in taxes without affecting your overall retirement strategy and your conversion strategy. So in that regard, that's a good lesson in Susan's story, right? What about meeting Mike and Linda, right? And remember, these are not their real names. But Mike and Linda, they were in their 50s. And even though they were still working, their situation allowed them to substantially convert during a period of time in the market where the markets were down substantially. So their account value had dropped temporarily. And so the taxable amount that they converted was smaller. But later, when the market recovered, all of that growth was locked inside the Roth, all tax-free forever, right? So free of that future tax under current law. And this is a perfect example or lesson of how market conditions, even when they're scary, as they can be sometimes, can actually help you in certain situations. A downturn, while stressful, can certainly be an opportunity if you're looking at Roth conversions strategically. However, had they been 10 years older and taking, let's say, retirement account distributions during this downturn, when this happened, then we would have to worry a little bit more about sequence of return risk, and maybe it would have made the conversion untenable. That goes back to timing, the first point, right? But every situation's different. So market risk can play into conversion strategies, timing can play into conversion strategies. And then lastly, there's David. I should probably do my quotations on everyone's names. But with David, against our recommendation, he converted basically a very large lump sum at one time, all in the same year, while he was still earning a high salary, okay? Again, that pushed him into one of the higher tax brackets, and it triggered a tax bill that was far bigger than he expected, and he actually ended up having to sell assets outside of his IRA just to cover the taxes. So David's story is a reminder that converting too much, too fast, without looking at or even possibly ignoring the advice and the tax ramifications can certainly do more harm than good. It's not that Roth conversions are bad. It's that the strategy you have has to be managed carefully and in the context of your entire financial picture. How does it tie into other areas of your retirement plan? So all of these examples really, guys, just point to one big truth. Roth conversions don't happen in a vacuum. They're tied to tax rates, income levels, market risk. So think about it beforehand. If you convert right before a bear market, you've already paid taxes on the money, that immediately shrinks in value. The problem is that no one knows in foresight when the next bear market's going to happen. That's why professionals do stress testing assumptions. What if taxes rise in the future? What if markets drop? What if healthcare costs spike? What will we do depending on these various stressful factors over time? This is called financial planning. And it's contrasted against basically just converting for the sake of converting. It doesn't make conversions bad. It just makes a bad plan make conversions bad, right? So it's not about predicting the future. It's about planning for uncertainty. And so if I had to come to a bottom line, the bottom line would be this: Roth IRAs, they can give you incredible flexibility and potential tax advantages, but they aren't automatically right for everyone, depending on how they're done, to what degree, the timing, and all the things we've talked about. So the timing of the conversions, how much you convert, whether you manage the risk carefully, that's really what determines success. Also, it depends on who the funds will be used for. Legacy conversion strategies, those meaning Roth conversions that are meant to be left to heirs if you don't need the funds, those have to be looked at a little bit differently as compared to funds that you know you may need in retirement to last till your life expectancy. So for Susan, the smart move was waiting. For Mike and Linda, it was converting during a downturn. For David, it was the hard lesson of how important tax planning really is. Your story will be different because you are unique. The key is making sure that your Roth strategy fits your income, your retirement goals, and your comfort with risk. So here's the thing: if you'd like to explore more about how Roth conversions can fit into your unique retirement plan, visit us at woottonfinancial.com or retire-clear.com and let us help you find clear direction for retirement. Till next time, take care, guys.